Brent oil hitting a two-month high above $63 a barrel earlier as OPEC supply cuts and the response to U.S. sanctions on Venezuela kick in. As you can see, prices are now at $55.14 a barrel on crude, and Brent is at $62.78. U.S. crude broke a three-month losing streak, posting the best January on record. Meanwhile, joining us right now is the global head of energy analysis for OPIS. That's the Oil Price Information Service, Tom Kloza. Tom, good to see you. Thanks so much for joining us.
Hi, Maria.
How does Venezuela fit into all of this in terms of the supply and demand story on oil?
Well, Venezuela has been losing oil production for the last few years. They did it during the Chavez years and then during the Maduro years. But they still provide about 600,000 barrels a day of heavy crude in the United States. And think about crude oil like carbohydrates and protein. They have a crude oil that's like a protein in the world needs right now. And so there's a pretty good chance, I think, this quarter that we go from Venezuela to Vendemonium, and we don't have any Venezuelan crude, and it fortifies prices pretty much throughout the world.
Tom, good morning. One of the things we're seeing in other markets, stocks and bonds, for example, is rising prices, and it's suggesting that investors are putting risk back on. So when you look at some other asset classes like oil, is the fact that oil is going up also have something to do with investors sort of rotating in as they put risk on and looking at some other places to park some money?
Well, it's an interesting construct, and we'll find out in the next few weeks. One of the problems of the government shutdown was we lost the pictures that the CFTC, Commodity Future Trading Commission, takes of those investor money flows. But I think you're right. I think that the money flow is coming back into oil. It's a good way to play, what could be otherwise disastrous with losing Venezuelan oil. And so I think money is the biggest fundamental, and it's flowing back into mostly long positions in oil.
Tom, this is kind of a wonky question. It's Dagan McDowell, but that Venezuelan oil is heavy and sour, isn't it? Unlike the Texas light sweet. And if we lose that oil, can we replace that type of crude easily where it's refined right now? Because those refineries can't really make those switches very easily to refine a different type of crude.
Well, you can always run the light and the sweet. The problem with the light and the sweet is that you get a lot of gasoline. And right now, gasoline is the world's undesired hydrocarbon. So it's odd because people think, oh, Venezuela, it's going to send the price of gasoline higher, when in fact it may mean that we're going to have too much gasoline production from U.S. refineries. If they had their druthers, they really would rather have the heavy crude, and they'd be making diesel and jet fuel and products that trade for a big premium out there. So if I had a diesel car or if I had an airline, I'm a little bit more worried than if I drive a motor fuel-filled car.
So earlier today, several European countries, including Spain, France, the UK, recognized Venezuela's opposition leader, Mr. Guaido, as the country's interim president. With that unrest, what else do you think happens that could affect U.S. refineries? I mean, is this a major impact for U.S. refineries?
It could be. I mean, I think that when you game this out, you have to game it out, and you have to figure that there's a possibility that Venezuela will not be exporting any crude oil in the first half of 2019. What they have right now is a trickle compared to what they used to. And some of it goes to India, some of it goes to China, some of it goes to the United States. But there's a scramble. It's as though there's a buffet, and there's a lot of items at the buffet that aren't there right now for U.S. refiners. And the last thing they want to do is make more gasoline, because there's too much of it, and they can't even get the price of crude oil for the price of gasoline. So it's more of an economic annoyance for U.S. refiners. But for the world, if we lose 1 million barrels a day of Venezuelan crude, we lose some Libyan crude because they're having their problems there, and we bring back some tougher sanctions on Iran or let the waivers expire, we're going to see higher prices, but not apocalyptic numbers.
How does the fact that the U.S. is now the largest producer in the world, how does the market change as a result of that? Let's say next 5 years.
Next 5 years, I think you're going to see the United States exporting occasionally 4 and 5 million barrels a day of crude oil, maybe more. We will be the largest crude oil exporter beyond Russia and Saudi Arabia. We'll be producing much more than Russia and Saudi Arabia, but we'll be using quite a bit of it. So as long as the price stays in the $50 range or higher, we'll see shale come on, and we'll be producing 3 times the amount of shale oil that we did as recently as like 2012.
That's incredible. Yeah. Tom, it's good to see you
It
this
is.
morning. Yeah.
Good to see you, too. It is energy dominance. You know, it's lining up just for terrific production numbers from the U.S. companies.
Yeah, really amazing. Tom, thank you. We will see you soon. Tom Kloza joining us there from OPIS.